Thanks, Alan, and good morning, everyone. On behalf of Union Gas, I'd like to welcome you to the final day of the 2015 Ontario Economic Summit. I thought the speakers and the panelists yesterday were terrific, and I'm sure we're going to continue off exactly where we left off yesterday. I think the questions we're going to be exploring over the next 40 minutes or so, with the help of our moderator, Kevin Lynch, and our guest speaker, Ed Clark, are: what does Ontario need to do to accelerate economic growth? What do we need to do as a province to be focused to ensure that Ontario is positioned to capitalize on emerging global trends and opportunities? And what can and should the government do to help? Just as a bit of background, Union Gas, as a company, we've been in this province for over 100 years. We've got 2,200 employees all across the province, serving more than 1.4 million customers. And one of the things we do know is that Ontarians, whether it's homeowners, businesses, or industry, need and want access to affordable sources of energy. And delivering clean and reliable natural gas has been and continues to be the focus of Union Gas. Been a lot of discussion in Ontario about infrastructure, and I can tell you that we are in the midst of probably the largest infrastructure build-out in our company's 100-year history. Over the next 3 years, we're going to be investing in excess of $2 billion in our natural gas transmission infrastructure to make sure that Ontario continues to have access to the most affordable and reliable natural gas supplies that we can, and to ensure that the continued competitiveness of Ontario across all sectors of the economy. As an example, one of the areas that we've been focused on championing recently is the use of natural gas in the transportation sector, as a way to both lower cost and align with the government's objective on reducing emissions. And as an example, we just celebrated the opening of a new natural gas compressor station in the city of Hamilton. And that station is going to support the conversion or the adoption of 120 new natural gas buses in the city's fleet. They estimate that it will save in excess of $40 million over the next 20 years, and equally as importantly, will reduce their emissions relative to their current diesel bus fleet by over 25%. So a great example where natural gas can play a role both economically and environmentally. One of the other areas that we've been focused on working closely with government on is the extension of natural gas into rural communities and First Nation communities that currently don't have access to natural gas. Again, to make sure that those communities have the opportunity to participate in the economy and be competitive, whether it's agriculture, manufacturing, or technology. So affordable natural gas is clearly an advantage for Ontario, and it's critical that we continue to work as both the private sector and the public sector on initiatives like I just talked about, compressed natural gas in Hamilton in terms of municipal bus fleets, as well as extending natural gas to communities that currently don't have access to it. So we can take advantage of that, again, from both an environmental and an economic perspective. So with that, I want to have the distinct pleasure of introducing our guest speaker this morning in our panel. Ed Clark is the current chair of the Premier's Advisory Council on Government Assets and is a trusted advisor to Premier Wynne. Ed Clark's job is really to recommend changes that will help the private sector create jobs and improve productivity. So he's the perfect speaker for our session today and definitely brings a wealth of knowledge and experience. In his previous life, Ed Clark was CEO of TD Bank Group for more than a decade, retiring as CEO and group president. He's been recognized as one of the world's 30 best CEOs by Barron's Magazine and was appointed to the Order of Canada in 2010. Ladies and gentlemen, please help me welcome to the stage Ed Clark and our moderator, Kevin Lynch. Thank you very much.
Thanks, Steve. Ed, welcome.
Great. I'm already looking after you there.
Thank you very much. When you finish that difficult task, tell us a little bit, and I want everybody to prepare, because this is really meant to be a chance for the audience to ask Ed questions, so it's meant to be very interactive. But, Ed just gave, I think, a really important speech, and it's titled Critical Shifts for Ontario's Economy. I think he delivered October 1st-ish to the CFA, and it really outlines, I think, a bunch of your thinking and others about what Ontario has to do to get ready and win in this new global economy. Can you give us a little sense of what the key messages you delivered in that are?
Yeah, I guess, in fact, I want to underscore, I think a lot of what I'm saying, you certainly have said, but a lot of people have said. I think there's an understanding of this. The way the analogy I use is that we have a pretty good thing going here in Ontario. I think anyone who travels the world comes back and says, this is a pretty good place. And my analogy is like you have this really nice car that's worked pretty well. It's, in fact, the 13th best car in the world. But the problem that we have is that we're 13, we're not first. There's a bunch of guys behind us that are catching up fast. But more importantly, what we're really good at isn't necessarily what you have to be really good at in the next 20 years. And so how do you keep what you have? It's a classic problem in a business. How do you, in fact, shift the Ontario economy to make it more competitive and to go to where there's growth? I think is the sort of core challenge. And that has a lot of things that we have to do. We have to, I think, start to recognize we are going to the knowledge economy. What does that mean? It does mean that you got to move from basic manufacturing to smart manufacturing. Huge implications for our training programs to do that sort of thing. We have to recognize that service exports are as important as goods exports, and we haven't really thought about that. We have a great small business sector, but frankly, it's a small business sector that isn't growing. The number of mid-sized firms are actually falling in the country, and we have one of the worst records of small and medium-sized businesses exporting. I think we have to shift our thinking around our core institutions. I mean, one of the basic fundamentals of the knowledge economy is the health system and the education system. If you go to San Francisco or you go to Boston or wherever, they are the institutions. We still think of them as liabilities. We don't think of them as assets. We don't integrate them into the economy. And I think if we're going to win in the knowledge economy, we have to do that. I think we have to recognize, one of the phrases I use, we live beside a country that's willing to pay its poor less and its rich more. And so when you try to figure out how to position yourself to compete with them, we cannot compete by this race to the bottom. And so what we have to actually do is go after the jobs that tend to pay more, because that's actually where we're more competitive. That's a pretty fundamental shift. And then the reality is that, governments, in my mind, matter enormously. I think if you look around the world and say, who wins, it's countries that are well governed. And we've got to end up with an economic strategy that deals with what I think is the growing problem in the next 20 years, is that globalization plus technological change are destroying the ability of middle class people to earn middle class income and working class people to earn good working class income. And so how do you have a growth strategy that deals with that issue? The one thing you do know is you must have a growth strategy. And that if the economy doesn't grow, it's always the poor that pay for that. And if governments are going to have the capability of dealing and mitigating income distribution effects, they have to have revenue, which means the economy has to grow. And so then how do you then turn the economy more competitive? And I guess sort of the last thing, and then I'll stop, is I think we are going to have to step back and say, governments can't improve our competitiveness by giving out money or cutting taxes, because they're financially constrained now. But what they can do is figure out how they're doing their job better. And in that area, I would focus on regulation. Governments will regulate. They have to regulate. That's their job to regulate. But we tend to regulate in a prescriptive way rather than an outcome basis. And I think we have to fundamentally go through all our regulatory systems and do it from an outcome base.
Ed, I think everybody would agree with you on the direction of what you talked about. One of the questions that doesn't come up as much, though, is we're heading in the right direction. There are another 12 cars. They're going in the same direction. Are we going fast enough and deep enough to kind of catch up to some of the cars ahead of us. So it's kind of the pace versus
Right.
the direction.
Yeah, and embedded in that also, if I can, is another question. And what do governments do about
Yeah.
this? Like, I think one of the real dilemmas is what role in the modern economy does government play? Because running around with a checkbook and buying jobs doesn't work in this new world. The thing that I got reading people like you and people around the world is the first thing that government can do is start to paint this vision about the change that's needed. Because you have to mobilize society because I think there's an element in which we run the risk of complacency in Ontario. We've been able to keep the economy going, but fundamentally we've got a demand-driven economy that's getting a bigger and bigger current account deficit. It all works until it doesn't work. And we have to get people energized to say, we must make these shifts faster because the world is always moving a little faster than you understand. So I do think it's important for government to get out and talk about the importance of these shifts. The second thing I would say is because of the importance of knowledge in the healthcare system and infrastructure, I always say most important thing that government should do is their job. And as it is, as I said earlier, it turns out their job is actually the centerpiece to a knowledge economy. And so that's why, I think what Ontario is doing right is you've got to pour your money into actually making sure you have a modern infrastructure for a modern economy. And then the other thing you do is, are you unnecessarily adding burdens to industry that don't actually produce any different outcome than people who found more efficient way of regulating. And I think that's another area where we have to go. But I do think we have to first get a sense of urgency.
I guess the flip side of that, and just your view, and then we'll open it up, is what about the private sector? Because this is a
Right.
private sector driven economy.
Right.
Government,
Right.
I think, sets
Right.
the vision thing, convenes.
Right.
But in the essence, it's the private sector that has to create the jobs, create the investment, the capital. How do you see the change that's required for the private sector? You've led and
Right.
been one of our most transformative leaders in the private sector. What does it have to do to make all this happen?
Yeah, no, I think we have to buy in, and I think business leaders have to stare in the mirror and say, am I driving my organization hard enough? Am I changing my organization fast enough? And it's discouraging, if you take a look and said 20 years ago, what did economists say governments should do? In Canada, the governments basically did it. And yet, at the same time, we still have private sector R&D spending that's way off the charts lower than every other country in the world that we're competing against. And so I do think our business leaders have to say, well, why am I not driving my organization? Why am I not going in and exporting the U.S. and just saying, well, it's easy here in Ontario, so why am I going to bother? So I do think we have to challenge ourselves. The good news is, I think, is that we are in the process of shifting the culture. The example that I use talking to people is in the financial services, car insurance is a bought product and life insurance is a sold product. And when you sell life insurance, you have to convince the person of the need and then you fulfill, whereas the government tells you got to buy car insurance and so you buy it. We were an economy that's built around more bought products than sold products. So if you're in the resources, you don't have to say, what could I use oil for? There's a whole market that even tells you just punch in the thing and you know exactly the price of your product. Or if you're a branch plant economy, somebody's telling you, I want you to produce this kind of car, just go ahead and produce it. We need to get an economy that's built more entrepreneurial, that says that's an idea-driven economy and an export-driven economy. But as you know, when you go into places like Communitech, you say, there are just dozens and dozens of kids that are doing this. And so I think we are in the part of shifting the culture, and we have to get a more entrepreneurial society and move away from business people as managers to business people as entrepreneurs.
And when you look at economies, I mean, the U.S. is a comparison, but it's not.
Right.
If you look at countries like Sweden, Holland, Denmark, you see them, in many ways, have made the shift towards a more knowledge, higher income, high training, high R&D economy a bit faster than that. So, I mean, we should look more broadly for private sector examples.
Completely agree. And that's what, in looking at regulation, that's what we're going to do. Because it's too easy for people to say, oh, you're just wanting to water down regulation. We're not wanting to water down regulation, but why can Sweden have less burdensome regulation and the same outcome as we have? And so you have to go to places where people say, well, they are good jurisdictions. We accept their standards, but they're doing it with half the regulations that we're doing it with.
Great. Let me open it up. Who's got a question for Ed? This is a chance to, I mean, we're very lucky to have Ed as the business advisor to the Premier, and thank you, Premier,
Yeah, and I'm real lucky that my boss
is
is
here taking notes. He's marking, actually.
You know, I first became a CEO 27 years ago. Now, for the last year, I have a boss again. A darn good boss, I have to say. A darn good boss, but a boss nonetheless.
That dollar a year is at risk. Who's got a question for Ed? Elise.
Maybe Ed, you could just talk about the role of private-public partnerships, how you see them growing, not growing, as you look to the future and the transitions that you think we have to make.
Yeah, so I'm a big fan because I think if you look at governments, I think there's consensus around that, although in some of these debates you realize there isn't complete consensus. But there is more demands on government in the next, or going to be in the next 20 years than they have capacity to do. And part of that is financial capacity, but also that is implementation capacity. And you know, to me, you just have to come to grips with the fact that you don't have the capacity to do everything. And so, you know, obviously, I think what we've done in 3Ps, I mean, we are the world leaders in P3s in hospitals. And so you're sitting there saying, why do you want policy people to say, figure out how to build a hospital or build it and maintain a hospital? Well, we want our hospitals, and that's what government should be doing. So I think there's still lots of room, even in the, you know, I'm on the Toronto Housing, Community Housing Corporation task force, you know, and we're saying we must do a huge amount to get more public housing built here in Toronto. But they don't have the capacity to actually do that. And so why wouldn't you get the guys who actually do this for a living? And I think P3 model has shown you could do it on very favorable financial terms. You don't have to get taken. And that, I do think it's a skill set as you go through, as you know, as governments come to grips with that, it has to build the internal capacity, because you can get ripped off by business, no question about that. You have to have the capacity not to be ripped off, but when you build that capacity, then you can actually extend your ability to do things, just as every private sector firm does. I mean, in the case of TD, we have had a $14 billion expense base. $5 billion was spent hiring for outside people to do stuff. That's huge, because we say, we're in the banking business. We don't want to be in this business or that business.
Great. Steve, is a question there?
You talked about the, you know, the need to overhaul the regulatory system and move from a more prescriptive to an outcome-based. Can you just touch on how do we create the sense of urgency to make that happen? And in your mind, what are the one or two things we could really focus on immediately or out of the gate to let that shift start to happen and put some urgency on it? Because we have been talking about it for a long period of time, so just interested in your thoughts in terms of how we would get that off the ground and get it moving.
Well, you know, just like in your company, in the government, the first thing you got to do is convince the boss that this is worth doing, because organizations want to know, does the real boss really want this done, or is this a paper exercise? So I think, like because the key problem in this area is that every one of these rules was made for a reason, and they responded to a pressure, and the people who are administering them believe in what they're doing, but what they're doing is not stepping back and saying, what's the collective burden on industry? What they're doing is saying, am I making sure that the citizens of Ontario are protected? And so I think the way you have to go at this is more analytically. And so one of the things that we're going to do, and this was an idea that I got from what Obama's doing in the US, he's going through all the regulations where there are state regulations and saying, does every state have this rule? And let's find the places where half the states don't have a rule and half the states do, see if their outcomes are any different, and then challenge the other states to say, well, then why do you have this rule that you don't get any outcome for it? I think we can go and say, let's take it, and I think you have to do it by industry. And you know, when you say, okay, well, let's go and look at the auto industry in the UK or the auto industry in Germany and say, what are the rules that they have, and line them up to the rules that we have, and say, well, if they've got
You may not want Volkswagen in
What?
that sample.
Exactly. But if they have half and there's no change in the outcomes, we have to challenge. So I think we have to shift the balance to actually get hard work to really say, what is the differences, and force the onus to say, well, then why do you have four? I mean, we do know that Ontario versus BC has twice as many regulations for businesses than BC does. So is BC falling apart because they don't have those extra regulations? And I think we just got to work and just roll up our sleeves, because the devil's in the detail, but we have to know as much detail so we can sit down and say, here's the burden you're creating needlessly.
Other questions? Hands up? Yes.
Good morning, Mr. Clark. Thank you for being with us. I'm Jennifer Sloan from MasterCard. Some say Ontario is a slow place to do business, and I'm just wondering if there is a best practice that you can identify for us in a jurisdiction that's doing well and moving with speed that we should consider.
Just missed the first.
Slow place to do business.
Oh,
The
yeah.
speed of, yeah.
Yes. You know, we hear that all the time, and it's true. So I think it is I won't get into it, but it is astounding when you actually start to look at what the timelines, and so I think we're engaged in this exercise right now of just saying, okay, we're going to go around the world and say, how many days does it take to get an approval in this country, and how many days does it take to get approval with you? And if you can't get approval in that time, then maybe we should outsource the approval process to someone who can do it in that time. I think this is where, again, if you have this, you turn it into ideological debates, then it's a debate about, well, you want lower standards, we want high standards, and you'll lose that debate. I think you have to turn it into a factual dispute, is other people are achieving the same outcomes and are being more efficient, and actually do it. Unfortunately, you have to do it rule by rule, and do real comparisons. But yes, we take too long. And there isn't a sense, but again, you understand, in the bureaucracies that we're dealing with, they're not being challenged to say, well, there's no measure in their performance that they reduce the burden on industry. All the measure is, did you make sure something bad didn't happen? So they're in the downside protection business. And we have to change that dynamic and say, no, but if the economy doesn't work, we can't afford to pay you, and therefore something worse is going to happen. So we have to solve this problem.
And isn't, Ed, part of that problem, it's not the regulators and the public servants, because in a sense, we've got a risk aversion system, right?
Right.
You know, the downsides of making a mistake are much greater than the upsides of having a faster system. So how do we actually move away from risk aversion into more risk management? Because that's how we'll get a system moving faster and better and smarter and all the things you were talking about. But that's a big change, because we've slipped into more of the risk aversion in every government, I think, in Canada.
Well, but it's also, let's not paint the private sector so beautifully run. Every one of us has seen this in our company, that you'll have parts of your company that say, if you're in the risk department, you're in the risk aversion department. If it's going to take me 3 months to approve this, it's going to take me 3 months. And we say, well, we won't get the loan if it takes you 3 months to do that. And so you have to create counter pressures, I think, and I think you have to have benchmarks. I guess one of the things that strikes me, it's easier in the private sector to have benchmarks, so everyone sees the benchmarks. But I think we have to have benchmarks, and for every one of these, we have to really understand what best practices are, what the benchmarks, and we have to reward the managers to say, you've got to hit those benchmarks.
I mean, it's an interesting, fintech is an area that's coming up, regulation going to come. Canada's always done well when it's veered more towards principle-based regulation.
Right.
Prescriptive-based regulation has been much more American. My fear is that we're all becoming more prescriptive-based, and I think that makes it slower and more risk-averse. How do we carve out a Canadian approach to principles-based regulation?
What was very interesting, that was the essence of the debate after the financial crisis, because the financial industry, we are principle-based, and the U.S. is prescriptive-based. And I'm absolutely convinced in my mind, prescriptive regulation, financial services, increases risk. Without question, it increases risk. And is one of the causes why the U.S. had the problem it did and Canada didn't have its problem. And that battle was fought out because the rest of the nations were trying to push Canada to go abandon the principal ways. And to their credit, our regulatory authority stood up and said, we're not moving, we're not moving. And so I do actually think we have a right cultural base, that we have a big industry that's principle-based, and we have to extend that thinking to other industries and say, and challenge, I guess I'd say, we've got to go to get the business community, because instead of having the government go around and do all the comparisons, if you want your regulatory burden reduced, come bring us examples of what California does, or Sweden does, or Germany, and show us that they have as equal outcomes with lower costs, and then that gives us the ammunition to go to the department and say, well, what's wrong with these facts?
Ian Klugman's over here is going to ask the next question. And you mentioned innovation, you mentioned Communitech, and I guess one of the questions
stars, right? Yeah.
But how do we actually make that the norm in Ontario rather than still the exception? Ian.
Well, take some of his DNA, figure out how you can move it into a bunch of other people.
I think that so much of what is going to drive change and what we've seen in our community has to do with culture. And so I think one of the biggest challenges is, this notion of moving from risk aversion to risk management, I think, is a really important notion. So I think, we do see, I think we do see some companies that are emerging, but I guess the question would be, how can we get more companies thinking about risk as opportunity as opposed to risk as threat?
Yeah, and just to, again, there's so many people in this room who know more about this than I am, so I'm puzzling my way through. When you look around the world, one of the advantages that some countries have, and I look at Israel or I look at the United States, is that they're war nations. and so they're at war all the time, and so they're spending a lot of money on military, and then it turns out, while they're spending a lot of money on military, they end up having a huge collateral benefits. And if you look at so many examples where you say, where even the CIA financed the people into their business, so they have a venture capital fund, as does the Department of Defense have a venture capital fund to build this technology. We don't have that, and so then you're trying to puzzle through, can you have all of this without any government help, or do you need government help, knowing that generally when governments help, they do harm, not good. And so, the Premier gets always a little. And so I don't know, but I think the answer, and I know you've talked about this, the answer is probably not zero. That doesn't sit. There is places, but trying to find those real places. I think we do have to sit there and say, or how do we get changed investor? Because, what do our investors invest in? They invest in apartment buildings and oil and gas and mining. They invest in the old economy, not the new economy. And we haven't built an investor class that says, yeah, I'm going to invest in 10 things and I expect 9 of them to fail. That is not in their mentality. They want a GIC, right? With upside. That's what they want. And so we have to figure out, I think that's what we have to sit down and say, what are the selective ways that government could nudge this along? As you know, for Kitchener-Waterloo, one of the things we're looking at, we have to figure a way to tie this geographically, and we're working on that.
I was down at Harvard Business School, and they're kind of pushing entrepreneurship, and I asked, how do you know when you're kind of approaching critical mass? And the head of the innovation area said, when geeks become gods, you've hit critical mass. The question, okay, back.
Good morning. I'm going to change the pace just a little bit, but actually I don't think it's so different from what we've been speaking about. We're in a period of unprecedented interest rates and a very stimulative monetary policy environment. Yet we continue to read about corporate balance sheets and
Stimulative monetary policy.
We're just having trouble hearing you.
Yeah, it's low interest rate stimulative monetary
So is this better?
balance
Is this a little better?
Yes.
Yeah, so we're in an unprecedented period of stimulative interest rates, yet we still read that corporate balance sheets have a lot of cash sitting on them, that interest rate environment is not translating in the property, plant, equipment, R&D investment to drive productivity. I wonder to what extent may there be a provincial role in stimulating that, and I guess a follow-up is we can only expect the monetary environment interest rates to go up. So if we have these issues now, what might it be like a year or 2 years out when we have a little different environment?
Yeah. Well, this is, and it really kind of rolls into, the Larry Summers secular stagnation debate and imbalance between demand and supply. I guess declared this is my personal, all these things are my personal views. I think we have had the wrong monetary fiscal balance. I understand why you don't want governments to get over indebted. Equally, I think the long-term impact of having extremely low interest rates, essentially mispricing debt, is not a good thing. And you see it in the constant upward pressure of housing prices. And I think what people don't understand about raising prices of houses is that that makes us uncompetitive. We looked at it explicitly at TD of what it would, we had to have to pay someone in a call center in Toronto versus in Boston or Philadelphia or South Carolina for them to have, they were to pay them to have the same standard of living given the different housing prices. And it was twice as much. And so eventually, having high housing prices makes you uncompetitive because you will eventually increase their wages so you can people can survive. So I do think if we could get off the drug of very, very low interest rates, that would be a good thing. And so I'm in favor of, a judicious amount, and that's where it's a big J, it's an important J, is I think we've gone too far in not in fact stimulating the economy. And I think generally now among most economists will view that the United States did it right and Europe did it wrong. And that Europe is going to have paid for a much longer period of recovery because they didn't immediately do a fiscal stimulus the way the United States is. Whether or not, 2 or 3 years, how long this period, I always find these debates are interesting intellectually, but it doesn't matter. If the reality is everyone agrees the next 3 or 4 years, we're in a slow growth world situation, it doesn't really matter whether it's going to go for 10 years or 5 years, because for 5 years it's going to matter. And I do think that's what we're in. And so that just puts more pressure on, in that world, you better be competitive. And, the disturbing thing for Ontario is that, 10 years ago, Ontario was a huge net exporter, and today Ontario is a huge net importer. And we have lost our market share in our biggest market, dramatic loss in our market share. And this is not a sustainable business model. So we have to figure out an answer to make Ontario more competitive.
Other questions down back? Alan?
Kevin? Is this on? Yep, thanks. Mr. Clark, thanks for being here this morning, and thanks for the public service that you're providing to all Ontarians. We've had a great deal of discussion over the last couple of days about scaling small enterprise and startups. What more can industry leaders do? How can we inspire industry leaders to become more engaged in the metamorphosis, the transformation of our province, i.e. investing in more R&D, investing in their companies here? We see more and more sort of branch plants. What can we do to better equip them to attract the R&D, to attract the investment to Ontario?
Yeah, well, I wish I could tell you the answer. It's frustrating. And you don't want to end up, I don't like the answer that, it's just culture, Canadians quit easy. That's not a good answer. On the other hand, it is striking because I've worked as a lot of people on both sides of the border, and 80-year-olds in the United States are putting it all in again and saying, I'm still ongoing. And 50-year-olds are selling their small business out and saying, why wouldn't I go to Florida and golf? And so how do you build a society where the small enterprise that starts to become middle doesn't say, well, now I can bail out. I want to keep on going. I want to take the world. And I think what we're trying to figure out is, well, what are the things that government do that makes that growth harder, or what are the things they can do to make it easier? So makes it harder, we look and say, again, it goes back to the regulatory world. I would say we should go through every difference between the US and Canadian and sort of product specifications and say, why do we have this difference? Because if you build a small business in Canada around a certain set of regulatory rules, the cost to you to then, so now I got to modify the reporting cost to figure out the US, get over the fact that's your big brother, we're the little brother, and let's go down and figure out how to do it the American way, and then only add on what you absolutely say, well, the American way doesn't get us what we want, versus we build the Canadian way, and oops, it didn't look like the American way. So I think you can try to say, how do you get out of the way and reduce the kind of threshold or raise the threshold where you can still grow and not have extra burdens. I think one of the, where around the world, in the UK, where they did do a very large study on this, was that the people run out of managerial talent. And anybody that's run a company knows that. I mean, we were a growth company, and our biggest constraint is, do we have enough people on the ground to actually, who can actually execute? And as you grow faster, and certainly when you cross the border, the capability levels change, and they come much higher. And so how do you do that? And so are there things that government could do where they say, okay, you know, we'll pay for consultants to come in and help you get through this stage, or things? Are there little things that you could do to break, what are the barriers that are causing people to say it's not worth growing, it's too hard? I think that's what we have to figure out.
I mean, on the same, one of our challenges in Canada, you mentioned our declining export share in into the United States. I mean, Canada ranks 17th in global productivity rankings. Ontario, we're probably 70% of U.S. productivity levels and falling. And that's the private sector's productivity. That's not the public sector. Many ways what we've talked about is what the public sector can do, and I think it's doing a lot, but the private sector gap, how do we actually start to close that gap? Because that's what's going to create the jobs and the growth and the incomes and the virtuous circle of tax revenues to keep rebuilding our society.
Yeah, I think part of it is, though, when you look through those numbers, it is shifting to where the growth, the higher productivity is. I mean, I think you have to, you know, why are the U.S. numbers, I always look financial service, why were the U.S. numbers much higher than Canada? It wasn't that actually, if you looked at a branch, the tellers were in different efficiencies. There were a lot more Goldman Sachs and their high-paid investment bankers, and that means they're, quote, more productive. Similarly, why is the United States more productive? Because it has Silicon Valley. And, you know, there are 300,000 Canadians in Silicon Valley. If those 300,000 Canadians in Silicon Valley were in Canada, we would be a more productive society. So I think you have to look at how do you shift your economy to take advantage of where you are. And I go back, I look at the health sector and the university sector. You know, I compare Boston, San Francisco to Toronto, and it's day and night difference of how they managed to exploit their institutions there, in a positive sense of the word, while still producing great universities for students and great healthcare systems for citizens. But they've turned those into economic machines, and those are high productivity businesses.
But part of, you mentioned Silicon Valley. Silicon Valley is 3.5 million people, but it drives U.S. growth. And, you know, we've been a little bit slow across Canada and Ontario to actually build those high critical mass, high density areas that benefit the whole province.
Right.
How do we, and that's a little bit Canadian as well, is to spread activity out versus concentrate and then draw in. How do we deal with that balance?
So two things. One is, yes, I you know, certainly people in Silicon Valley say, you like to back losers, we like to back winners. And I think that's you know, we have to break that culture. I think the other thing, though, that you see is that you can find places in the United States, a lot of places in the United States that look like Canada. What gives the United States strength is it has places that don't look like Ontario. But I think Toronto has and the whole southern part of Ontario has the capability. As we know, if you put KW together with Toronto, we're world class. We could be a super cluster, but it requires a commitment. If Waterloo is really a better form of university, which is pretty evidently in engineering, all this stuff, it is, we should be doubling up on those sorts of things and saying, let's play that winner. The other thing that, you know, has gone around where I think we lack, and you see it, is that there's a lot of old cities that have rejuvenated themselves, but that's because, and this goes back to your private sector point, and they do this a lot in Germany, they do it in Holland. These companies actually get together, and the competitors get together, and there's an element in government, but it's fundamentally driven by the private sector to say, we cannot survive here if we are not paying jointly for the basic research. Let's compete on development, let's not compete on basic research. And they've created these hubs that are kind of brain clusters, they're called, where they really do have private sector firms. We don't have that culture. We tend to have a culture, everyone does their own thing. And I think we can't survive without getting more of that.
So part of it is building that Team Ontario kind of culture.
Exactly.
Ed, let me, on behalf of everybody here, thank you. We're very lucky that you're doing this in your retirement years. You've been a transformative leader in the private sector. Hopefully you're going to bring the public and private sectors together for kind of growth, jobs, and kind of the middle class in Ontario. Thank you very much.
Thank you.